Hey guys, Chris from the Hidden Reserve, and today's video I want to talk about a huge misconception with whole life insurance. Now, if you're new to my channel, I have lots of videos talking about whole life insurance because I just believe when used properly in the right scenario, it's just a very powerful asset. But today I'm actually going to be talking about one of the biggest misconceptions and downfalls of it, and something that's not portrayed often online, and that could be detrimental or just improperly set expectations for someone who's looking to get whole life insurance, okay? And what that is you lose money no matter how you set these policies up. You will lose money in the early years. Oftentimes around 5-6 years, sometimes a little bit less, but oftentimes the first 5 years of these policies, you will be in the red. You will have to take a negative hit on your money for quite some time. 5 years ain't, that's a good amount of time. And it's not only until year 5-ish, again, it's different for everyone, but typically around year 5 where you hit your, what's called your break-even point. So the money you contributed to the policy should equal the cash value, or you might even have a little bit more in your cash value by that point in time. So that's 5 years where you're putting money into this thing and it's negative. Okay, and that's just something a lot of people won't talk about, and I have no problem talking about that, because one, if you're not okay with that and you're more focused on that than the overall different strategies that entail whole life insurance, then you're looking at the wrong thing. You have to look at the big picture. You have to understand the long-term vision with a lot of the strategies around whole life insurance. But if you're going to nitpick that one thing, then you shouldn't do it, and you're not going to have a good experience with it. That's really what it boils down to. But at the same time, I'm going to share that with you because it's hey, this is how it works. There's no way around it. There's no way around it. That's one of the biggest downfalls to this product, is that you're negative in the early years. No matter how you slice it up, no matter how you design it, you're going to lose money in the beginning. So that's just something I wanted to jump on and talk about, because a lot of people try to hide that fact, focus on, over time, you're going to get 3-4% internal rate of return, which is amazing because the proof's in the pudding. Especially if you're with carriers that have been around for a very long time and they have that track record, 3 to 4% on your money that's not uncommon at all. And that to me is a very, based on performance track record, if you will, that's very realistic, and that isn't that's the correct expectation over time. But you have to realize, to get to that point, to long-term play, and in the early years, you're going to be in the red. Just an example, if I put $10,000 into a whole life policy, and let's say my goal was I want as much cash value as possible, you could set it up in a way where you may have 90% of that 10,000, so $9,000, be in your show up in your cash value in the first year for you to utilize. But no matter, that's best case scenario right there. Yeah, there's scenarios where I guess it could be a little higher depending on your age, your health, but for the most part, you're getting 90% in the first year. That's really as good as it's gonna get. And there's no way to get to 100% with a whole life contract. And with that in mind, again, it's not usually till year 5 where you have your break-even point. So if I'm putting 10 grand a year in, by year 5 I would have put in 50 grand. At that point in time, I should have at least 50,000 in my cash value, if not a little bit more. Okay, so this just very important to be aware of. Especially if you were thinking about getting a whole life policy, or maybe you have one and you're early in it, maybe you're just in the first year, just know hey, you're going to lose money in the beginning. There's no way around it. Just look at, hopefully you were explained, if you already have one, the power of it and why it's such a strong asset from a long-term perspective, and there's short-term aspects to it as well where you can utilize it. But you just have to understand the full picture, and just know you're going to lose money in the beginning. So again, I'm kind of beating a dead horse at this point, but I wanted to make this video to bring you some clarity. If you found it helpful, please leave a like on the video. If you have any questions, comment them below, And if you're new to the channel, subscribe. I make videos like this all the time, and I look forward to seeing you in the next video. God bless.